Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your financial market wrap-up for this Tuesday, the 11th of July, 2017. All right, my friends, the markets are closed, as you can see, and we had an up day in the stock market, even with the email fiasco that the press is trying to make out of it, of Donald Trump Jr. receiving emails in writing, which he turned over already, about a meeting with a potential Russian that might have had information on Hillary Clinton. Turned out the information wasn't there, and he left the meeting. Press is trying to say, oh, this is illegal. What's illegal about it? If you're running a campaign or part of a campaign and you have information on somebody that might be damaging to them, you think you don't have a meeting? I'm lost. I mean, there is a point of this ethics, which is crazy. There's a point of reality, what people do, and the other. Maybe he should have reported that meeting when asked if he ever met with any Russians. But as it turns out, this woman denies she's a part of a Russian government to begin with. And as it turned out, she wanted to talk about Americans adopting Russian children, and there was nothing else there. That's what the press is saying. I don't know. I know that anything to take your eye off of getting health care done or anything else, it appears that there are certain people in Congress, they want us to take our eye off of that and just hone in on this. This is the way of stopping Trump in his tracks. Okay. Meanwhile, the stock market didn't buy it. The stock market came back to unchanged. What will move the stock market tomorrow isn't Donald Trump Jr. It's going to be Fed Chair Yellen as she speaks at 9 a.m. Central Daylight Time in front of the House Financial Committee and then on Thursday in front of the Senate. Now, the big thing is tomorrow's questions, because most of those that will be asked Thursday will have been covered, I would assume, by tomorrow. But there's always some that aren't. In any case, we'll see what that means. Metal markets up at the expense of the dollar, which slipped back, and most of the currencies up with the exception of the British pound today. Energy prices up, and they had a very good API number. It came out at 3:30. It's already in the marketplace because the market trades till 4, and they lost 8 million barrels plus of crude oil and about 2 million barrels of gasoline. They had a build of about 800,000 barrels of distillates, but they're draws, and that's welcome. We'll see what that means for the market. As for the grains, it's still very much a weather market, and away they go. But we're on here on the NASDAQ, and I'm going to focus on that. We've been in a downtrend. If you look at the weekly area of closes, you can see how the thrust has been down. The peaks have not taken out previous rally highs, including the one you're in right now. When you come to a daily bar chart, you have a market that's come down, made new lows for the move, just over the 55.50 level, and has had a nice bounce back to the upside. And that bounce today carried over a previous low of 56.90.75, knocking out the downtrend that began right with the combination of these two lower highs and lower lows. Got that? You no longer have that pattern. When you don't have a pattern of a downtrend, lower highs, lower lows, or a pattern you don't have of higher highs, higher lows, you have nothing. And that's what you got right here. A lot of nothing on this chart. Where's the market rally to? Well, I call the red line the line in the sand. It's where trends seem to come from. Markets often like to go back to that number to figure out what to do next. And it's the 18-day moving average of closes, that red line. The 100-day is here, and we haven't hit that for a very long period of time. What we did hit a week ago, roughly, was the lower Bollinger Band. That stopped the decline, and the market's gone back to the 18-day average to figure out what to do. Remember, the Bollinger Bands, these black dashed lines, are algorithms designed to keep the market 95% of the time within them. You never want to go beyond that. If you go to 100%, what's the point of having them on the chart? They're never going to be hit. And if they're hit, it's rare, real rare. Most of the time, this is the right number, developed by John Bollinger. Very, very interesting system. When I took to quickly once I understood fully, what I think is fully at least, maybe I don't understand it all the way, the concept of it, because there's so many takes on how to use this. When you look at the slow stochastic, this is your momentum index, and it is pointing higher right now. So momentum is up. The bias is up because the market closed over the 18-day average, but you are trendless. You're more or less caught in a sideways trading range at this point. You see that even better in the September Dow Jones, which is in a downtrend in terms of the swing line, lower highs, lower lows. But if you look at the settlement, you're over the 18-day average. The two fight each other, and you have nothing. The bias is up, the swing line is down, and momentum is flat in the water as can be. Obviously, this market's looking for a reason to do something that it doesn't have just yet. I can almost make the same argument in the S&P. In the S&P, the trend is down. You have lower highs. You have lower lows. We don't know where this low is going to end up yet. If you were to take out 2430, you end up with a pattern of higher lows, higher highs over the 18-day average. That can actually be bullish right away. So this market can flip-flop on you by just rallying about 6.5 points or so, and it might be able to get up to the upper Bollinger Band. Momentum is at least pointing up here, but the market is now still in a downtrend with downside bias until you take out 2430. Another way of saying it, the bears are going to try to sell the market, I think, and hold the market from getting over 2430, and they'll flip-flop if that difference happens. It's the same thing in the Russell. The Russell has a pattern of lower highs, lower lows. It closed today over the 18-day average. That keeps you from being bearish, the market. The swing line's down, the bias is up, but momentum is flat. Big nothing here. When we come to the VIX, I know I'm a broken record, but folks, the simple fact is I've been right. This market is caught against this 18-day average of closes, and the people getting rewarded, I wish I could tell you how long that will last, are those that are not trend traders. They are coming in and getting short against Bollinger Bands and long against Bollinger Bands, the exact opposite of what normally you do in a market. But that, you have to observe what is going on, and it's because the market is really void of any trend. I could argue that you've got an uptrend if I wanted, higher lows, higher highs. You closed today literally right over the 18-day average, but momentum is flat. It's been a difficult market, one that I don't bother trading, by the way, in terms of recommendations or anything else. I'm a commodity broker, not a stock broker, so I can't really trade that. When we come into the T-bonds, I'm not licensed, that is, lower highs, lower lows. As you can see, you've down against that 100-day average of closes, and you're trying to lock in an embedded reading. Now, let's take a look. Both numbers are under 20 today, both under 20 yesterday, and the day before, both under 20. So you have your embedded reading. This market's going to be looking tomorrow hard and fast at what Fed Chair Yellen says. If she's dovish, you're going back up. If she's super hawkish, well, the trend is already down. You might even go further down. We have to wait and see. And that was the bonds. Did I call that the notes? That's the T-bonds. The 10-year note is the same thing, an embedded reading. They look so similar to me, not much I can do. Unlike the bonds, you have a higher high and a lower low profile. This market would get very bearish if you got under today's low of 124.28, which from here isn't all that far. It's about 10.5 points. So something to be watching. Then I would say probably it going down to that 124.17 level. Lose the embedded reading here or here, I'll make an argument that you go back up to the 18-day average of closes. In the dollar index, my eye goes to the fact that you're very oversold. The trend is clearly down. Lower highs, lower lows under the 18-day average. But you are too oversold to do much. The difference here is, are you going to embed in the euro currency? Now, let me show you what I mean by this. First off, we have the pattern of higher lows, higher highs. That's bullish. You're over the 18-day average. That's bullish. So today's action, both numbers that make up the slow stochastic are over 80. The day before, they were both over 80, but not the day before. Tomorrow's going to be a key day. The odds are this market's going to try to slip back. Will it slip back enough to not embed is going to be the big question. In the British pound, the trend is down. You now have that pattern of lower highs, lower lows. I have a question. Ask yourself something right now. How much easier is it to see a trend with those swing lines than without it? I developed them, and I'll tell you, I look at charts, and mentally I know how to plot them right away. But when I talk to the average person that I'll sit down over a lunch or whatever with, and we might whip out a chart or something, whoa, they don't really even understand the concept. And that's why I like this so much. But you're over the 18-day average. The two fight each other, you have nothing. Momentum is pointing down, okay? And in the Japanese yen, all you did is get a bounce off the lower Bollinger Band. It's more than overdue. You still have your embedded reading. This market's probably still in a sell configuration going into tomorrow, and that's what I'd look at. Look to see if the sellers show up. Now, as I said, you got a nice bounce in the crude, and that bounce was enough to turn you into an uptrend. You now have higher lows, certainly higher highs, until you take out 43.65. The market's bullish. Wouldn't be surprised that you see pretty good buying against 44.48, with traders blowing out if it gets under 43.65. They may even go short, looking to get back to 42.25. The upside target, 46.73, the upper Bollinger Band. Gasoline did the same thing, but gasoline's very overbought. It's probably the market to avoid. Overbought is a signal you always pay attention to. You got higher lows, higher highs, you're over the 18-day average, but it's overbought. Trend is up, but an overbought trend. And the nat gas. Okay, now it's in an uptrend. Higher lows, higher highs. Look for the trade to be a buyer at 297, and if you get under 286.30, they will want out. And if you get up to the upper Bollinger Band, wouldn't surprise me if that's one of the profit zones. Now, I want to talk to you about Modern Trader, but before I do, and by the way, this is the new look of Modern Trader. It's pretty exciting. I want to remind you, we love when you tell your friends about watching our videos. That's what makes the viewership grow. That's what keeps me doing this. Otherwise, I don't have to do it. I like doing it. I love teaching, and I'm bringing you many years of experience. With that in mind, I also want to tell you about something I've read now from the first issue it was ever published. It was called Futures Magazine On. I have still just about every issue, I think. And to make a long story short, whether or not you're an ETF trader, a stock trader, futures, derivative, options trader, there's an article in here that covers all that. Yeah, they look at the option plays, they look at all this, and then they give you ideas on different trading methods, and it is written for you. It is not written for the computer genius that this building is full of. These kids come to work in their flip-flops and their shorts, and you would swear they're I don't know what they did all night. They don't look right. And don't get me wrong, I was one of them when I was young. But they're geniuses with math. Well, I'm not a genius with math. This works for me. There are plenty of magazines out there that are devoted to the algos and all those. Go read those. If you're like I am and you want to understand these things and get a grasp of it, this is the magazine to read. Comes out once a month. It's a $80 a year value. It's free through me. All you need to do is give us a call at 866-973-2077. You can always go to our website at www.iraepstein.com. You can click right up in this area here. If you're watching me on YouTube, you'll see an icon. Our forum will appear, or underneath us on a number of websites. It says, click here for Ira's free offers. You'll get that. We give this to you. It comes all as email. It's easy, so be it in Europe, be it in Asia, anywhere you want, they'll be happy to send it. It's not coming by post. To get it by post, they do have this, of course, but you have to pay a fee. Let's face it, paper, postage gets very expensive. Emails, they're kind enough to let us get this to you, and that's what we want to do. You have a great day. We're going to watch Janet Yellen in the morning, and I'll be talking to you at your updates tomorrow afternoon, and, of course, in the morning with my morning flash update. Take care now.